Well, hello, Motley Fool investors. We're so excited to spend the next hour or so with Zak Calisto, the founder and CEO of KAROOoo, which is probably how it's often introduced. And people are always, I'm sure, wondering about the name, which we'll get to in a second. It's a fun story, but I'd really love to just start, and Emily Flippin here as well, Tom Gardner. Uh, Both of us have recommended the stock. It's been recommended a number of times now in the Motley Fool to our members, and we're so excited to get a chance to spend time with the CEO and hear your thoughts, Zak. And I'd love to just hear the origin story, if you would. What was the moment you realized you wanted to start this business, and how has it developed since inception?
I had a vehicle stolen from me in around 1994. At that point in time, someone I knew brought some technology to South Africa, adopted it, and they started a track and trace uh, company to recover stolen vehicles. That's how the business actually started. I became one of their agents to sell on their behalf, and I ended up selling about 80% of their business, 80% of their sales. I rolled out quite a big network. In 96, 97, they asked me if I would help them open up the geographies in the neighboring country, South Africa, which I did. And in 99, they asked me if I wanted to go to do a joint venture with them in Brazil. I went to Brazil. I said, it's a great market, but you'd need to redevelop your technology because the unit economics won't make sense there. They decided it was too expensive to develop the technology, so I developed it myself and entered negotiations still to go to Brazil with them. And then we didn't reach agreement, which then led me to sell all my interests in the previous agency business. And I then decided instead of going to Brazil, it's much easier just to start in the markets that I know. So I had the advantage of knowing what not to do in 2004. We went to the market with also a very simple solution of track and trace. Uh, and in 2007, we decided we've got a lot of corporate customers that need more than just track and trace. We went into fleet management. And it's been, a total building the current platform from the ground up. And today our platform is much more than just fleet management as well. And if we look back to 20 years ago, what we had and what we got now is really, we're in a very different space. And that's sort of my life story.
I've always loved that story. In fact, when I first started researching KAROOoo after you went public, just a handful of years ago, I went to one of the analysts here on our investing team who was actually from South Africa. And I said, have you heard of CarTrack? Talk to me about this business. And he says, yes, you as Americans oftentimes don't understand just how pervasive car theft is and vehicle hijacking in geographies, including South Africa. So it's something that really appealed to consumers. But talk to me about how your business exists today, because making that transition from consumers to full telematics and fleet vehicle management has opened up a lot of opportunities for you, from changing a business from just sticking a device onto a car and saying we're going to track that to you, to being like, how can we be this vertically integrated solution that includes hardware and software? When you look at your business and how it breaks down in this moment, how much of that is consumer versus how much of that is enterprise, and where do you see growth from here going?
So, like I said, we started in South Africa, very much track and trace. In 2007, we started enhancing our platform to be able to do with fleet management so that we could service our enterprise customers better. Today, approximately 50% of our business in South Africa is commercial business, 50% is consumer, and South Africa today constitutes 70% of our subscription revenue of our group, and 30% of the subscription revenue outside South Africa, that's enterprise business in Europe and in Asia. So in total, you're probably looking at this point in time, about a third of our business is a consumer, and about two-thirds of our business is commercial customers. Clearly, what we do today, we got a tremendous amount of business intelligence reports, live alerts. Um, we push and pull data through APIs into our customer systems. Um, We have very complex solutions for different customers depending what industries they're in. Today we service customers, whether they're in logistics, whether they're ambulances, whether they're doing cold storage, whether they're moving bio waste. It's an endless amount of industries that we serve. And the reality is we continue to develop this platform because as we get closer to our customers, as we develop more, we realize it's just endless challenges that the customers face from being able to either transport goods or transport people, and from the whole supply chain. It's addressing all of that. So I believe we still have a very long way to do development as we get closer to our customers. And I would say the fleet management portion of the business, we probably had that done in about 2012 in a very comprehensive. Now it's everything that lies on top of that fleet management business.
There would be no reason you would have played this game, although we're about the same age, Zach. And so maybe you had a computer game here and there in your life. I don't know. My brother and I played a lot of them growing up. There was a game entitled Civilization by Sid Meier, which is an absolutely wonderful game. One of the first things you learn in the game is you've got to get out of your home territory to expand. You've got to look elsewhere to broaden your civilization. I won't go into any more details on the game, but obviously you had that thinking in South Africa as your business was flourishing and you realized we need a larger market opportunity, and you chose to pursue Southeast Asia and to move your headquarters to Singapore. So my primary question there, actually, having done a fair amount of reading on why you made those decisions, is why do you think the market was so open in Southeast Asia? I would think that there would be a lot of competition and that that would be a relatively crowded market, whereas you see it as a promising, wide open opportunity.
So we operate in South Africa. Just to give you a bit of color, we've got 5 peers that we compete with. Those 5 peers, we've competed with them since we started. They all started in South Africa in 94, 95, 96. We started in 2004. Today, we are the largest, we're the fastest growing, we've got the best financial profile. At that point in time, the Singapore government, one of the Singapore government entities had been asking me since 2004 to bring the technology to South Africa. And I didn't really take them seriously, and I had too much to do, and I'm a great believer, don't go abroad until you've won at home. By 2015, when we came to Singapore, we had won at home. We were clear winners. We are still fastest growing. We continue to be the winners. We continue to grow the fastest. And we started in Singapore. Singapore, we liked it because it had a very sophisticated market, very AAA country with easy to get talent. It's very easy to recruit talent. In South Africa, if you want to bring in a few engineers, it's not that easy. It's complicated. In Singapore, you get it done in a week. If you want to bring talent from anywhere in the world, you get permits for them to come in. It's quick. It's very business friendly. And then we also saw the rest of Southeast Asia very much as an emerging market, mirroring South Africa, but without the crime. So it was something we understood. And we operate in Southeast Asia, New Zealand, and the UAE as well. And in my opinion, we've been relatively successful, if not to mention very successful. However, we did have 4 very tough years, which was COVID. The way COVID was handled in Singapore in Southeast Asia was very different to the way it was handled in the rest of the world. I mean, you virtually couldn't leave your house. It was very, very difficult. And then post-COVID, we also had the problem that nobody wanted to come to work. Everybody wanted to work from home. So we've had 4 very difficult years, but despite that, we continued to grow during those 4 years, and we're just starting to accelerate our growth once again now.
One of the most impressive things about your business, and you mentioned it, was your ability to drive profits and build up this incredible financial profile while also growing rapidly. And it's rare that you get to see companies that are expanding outside of their home geography, which, as you mentioned, you were a later entrant. You've dominated that market. I think when I first did my research, 1 in 10 cars in South Africa were being managed on the CarTrack platform. That is an incredible amount of scale. But you've taken that success and you've also managed to maintain that financial success while you've been expanding internationally. And again, that is absolutely incredible. But when you look at these new geographies, do you worry at all about how success in Singapore Singapore or Indonesia or the UAE or the EU could impact your level of profitability, considering you've already scaled so successfully in your home market?
So I think today, we're profitable in Asia. We're very profitable in Asia. We're very conscious of capital allocation. We run very tight unit economics models, and we don't just sort of go with a gunshot approach where we just throw money at it until we win. We actually have a very slow, methodical approach to growing a business that gets momentum over time. So we believe in the rule, the power of compounding as as opposed to go out there, grab as quickly as possible and fix all your internal problems later. I believe you can only really do that where you grab a land grab and fix your problems later. If you've got a tremendous amount of cash to burn and you're willing to put that at risk, and two, you're is very much in a market that's a monopoly, if that makes any sense. So we're very conscious of capital allocation, and we're extremely profitable in Asia already.
We actually have built an AI powered scoring system for public companies, mostly US listed, but increasingly we will be moving to evaluate companies around the world. And you have one of the highest financial scores of any public company, certainly of any small cap public company. You also have a ROUNTA, which is an acronym for Return on Unlevered Net Tangible Assets, which is something that Warren Buffett has written about in past shareholder letters, essentially evaluating how much operating cash flow you can draw out of your physical asset base. And the ROUNTA at KAROOoo is about 35%. Buffett says, I like it when it's above 25%. So all of the financial metrics are outstanding. And I'd love you to let's go to the rule of 60, because we've heard rule of 40. I'm even wondering when we'll get to rule of 90 at KAROOoo. But tell us what level you're at now and what that represents to any viewers today that aren't familiar with that concept.
I haven't got the exact maths with me. The reality is, as I get older, I pay less attention to the nitty-gritty of all these calculations, and I'm more worried about the welfare of the business. But I believe it's just a combination of your growth margin, your EBITDA margin, and you add the two, and you get to 60%. So the reality is that we have got a very profitable business generating really good and operating cash flows, and our growth rates are what I would consider very healthy. But given the cash that we generate, the free cash, which I would like to allocate that cash into the business to grow even faster, if that makes any sense. So the reality of it is that we want to grow faster, but given the way we approach our capital and our exposure to risk, it sort of slows us down a bit at times. And perhaps it's given my age. If I was a younger lad, 30 years old with 20 good degrees, I'd probably throw cash at it, and if it didn't work, I'll just start a new venture next week.
Well, just a quick follow up on that, and actually taking it in a direction, because I know, Emily, we want to ask a couple of financial questions, but just to take it in a direction about you and your leadership. Rule of 40, generally revenue growth rate plus profit margin should be greater than 40%. Your rule of 60, which is an indication of unbelievable levels of profitability, extremely high retention rates. But I just wanted to jump in on what you shared about, you're getting older, other people are in the nitty gritty, you're looking at the broader vision. Can you talk a little bit about your style as a leader? We run a basic sort of Myers-Briggs like methodology at the Motley Fool called the Synergist Quiz, which distinguishes 4 different traits for each of us. And of course, we have capabilities in all 4, but one of them is to have a lot of ideas. Another is to get things done on time. Another is to build systems. And another is to be a people sort of unifier. And so I'm wondering where I'm assuming you have a high vision or idea generation score. I don't know, but how do you view yourself and work with your team? Because when you say you don't get in the nitty gritty details, having listened to your quarterly conference calls, your presentations are outstanding. You obviously have a team that gets into the nitty gritty very well, and I enjoy them a lot. But can you talk about your leadership style relative to the team that you've built?
This might sound like I'm contradicting myself. So I am a man of detail, but you got to focus on the detail that really matters for the health of the business. So when it comes to working out the rule of 60, I don't think that's that important for me to determine whether the business is healthy or not. So I just wanted to clarify why that's detail that might not be that important to me, if that makes sense. This is detail. It's a byproduct, actually. So I think I'm quite detailed, but at the same time, in a healthy way. Otherwise, you could get lost in the analysis paralysis, and everything matters. And at the end of the day, you're not making the decisions that's important. I think my forte is building teams, understanding people, understanding what people are good at, and understanding people that will not be a culture fit for us. And I think that's one of my strengths is building teams. I also think I'm quite pedantic at building products and to make sure they work and that the customer is getting the best service possible. And I'm also uh, very pedantic about making sure we've got control about the full value chain of our operations, and which implies customer service. So it's very much about making sure we vertically integrated, making sure we've got a great culture, and making sure we're building the right teams, because at the end of the day, we're in the business of building teams. If you can't build the teams, you're not going to have a good business. You might have a big business, but it might not be a good one, if that makes sense. So that's more my management style. Great teams, great product, and then pay attention to the way you spend money.
It's beautifully said. And actually, I love your commentary around the details that do matter versus the details that don't matter. When you get into, stock research and analysis, you can drown in facts and figures, and 99% of the stuff you come across probably doesn't actually matter to the success of the business. The hard part is finding the little bit that does. And one of the things that has really mattered to me in my research for KAROOO, going back to your financial profile, has been the return on investment that you get from virtually everywhere that you put your capital. And in some ways, you run this business like an old business. You can tell it was built up in the 90s. You pay a dividend and you're very disciplined when it comes to capital allocation. But at the same time, when I look at these return on investment metrics, I think to myself, I am 30 years old. I would love to be throwing capital everywhere I could in this business, but it's a pretty capex intensive company. So you haven't gone out and raised a lot of debt and raised a lot of capital in order to expand really aggressively. And do you intend to maybe change that moving forward as you get success in the new geographies, or is slow and steady really win the race here?
I think the reality is this, Emily, if I could have it my way, I'd be growing at 300% per annum. Does the market exist to grow at 300% per annum? Yes, it does. It's all about execution. And then it's all about execution and keeping your culture so that it's sustainable. Because you can go out there, grow at 40, 50%, and then you say you're going to become profitable later, and you might never ever become profitable because your customer retention might not be there. The minute you want to contain costs, then staff will leave you because they've been used to not a disciplined environment. They've been used to earning too much money. So it's always tricky to then cut back later. So we stick into the way we're doing things, but I'm not against raising cash and getting debt and issuing shares. But we'll do that when we find that our free cash flow is not sufficient. And I would love to be in a situation where we're raising cash so that we can grow faster, but not just raising cash so we can throw cash at it to grow faster.
Beautifully said.
I'd like to talk about your product offerings and your solutions. I kind of have a two-part question. The first is I'd just like to hear a little bit of the breakdown of the product suite in car tracking and KAROOO logistics, just to make sure that our members understand those two components of the business. And then I'd love to hear about your product development process.
So I'll touch the product development process. I think one, we listen to our customers, but we don't let our customers determine what we develop. In other words, what I'm trying to say is, if a customer comes and asks us to do a bespoke offering, we rather lose the customer And we have got instances where customers have come to us, they've asked us for something, it's very bespoke. It's very bespoke in the way they run the business. And we might actually think, it's actually a great idea, but it's not the right time for us to do that. We've got other things, to do. And we'll rather just lose the customer. Uh, when we started up building our platform, we went in the fleet management space. We said, what do we build so we can address 80% of our customers' needs? Then that became 99%. And then it becomes, it's no longer the primary needs that the customer needs. What else can you be doing for all these customers? So you can continue to add layers onto this platform, and you continue to reiterate how the platform works, because the more you put on the platform, the more complex it becomes. And if it becomes too complex, then adoption becomes a problem. So you've got to have a relatively sophisticated, complex platform, but that's easy to use and that's easy to train somebody and guide people to be able to use it. If we look at our platform today, we've got all the bells and whistles and alerts of a fleet management company has got. We've got the tag unit, which is a RF tag. We've also got a tag unit that's GPS and GSM. So we have two types. The latest is our own proprietary network. So even if you come with jammers and the drivers don't want to be seen, we still have visibility of them, because they then are using our proprietary radio frequency network, which they don't jam. We've got video, we've got AI video. We started doing video in 1998 with what was termed in those days machine learning. Today it's called AI. And obviously we've brought down the cost of those cameras substantially, and now we're going to the broader market. We started selling them approximately 5-6 months ago. We've had Q1 of sales. We're starting to get good momentum. Q1 was slower than we expected, but Q2 seems to be picking up the pace and keeping more in keeping with our projections. So we've got things that automate and check and have your fuel consumptions, your maintenance of the vehicles, your administrative costs of running those fleets. And more importantly, we push data into HR systems today, where large companies can actually see if the staff was actually at work before they paid their salary. Before they, HR is disconnected from the operations, if that makes any sense. You log in and you log out and you get your salary paid. And in large companies, everything goes unnoticed, if that makes any sense. So there's a lot of improvements we bring into businesses. Then on KAROOO Logistics, it's very much integration into our customers' warehouses, into our customers' apps. It's a B2B solution, so we're not customer facing. We integrate into our large enterprise customers. They have apps which the consumers then buy their goods from, and then we determine the packing and the whole operational process, and then we get the crowdsourced drivers to do deliveries for them. What we're currently building is also onto that is courier. So if our customers have got, for example, 70 vehicles, but they've got too much work and they want to use a third-party courier, they just click on our platform and they automatically can choose the courier, which means that one single platform, they can have visibility not only of their own fleet, but third-party vehicles as well. And we're also doing freight. So these are two things that we're developing. Hopefully we'll have that developed over the next 12 months. And then our customers can have full visibility on all their mobility, whether the vehicles belong to them or they don't. So that just gives you a little bit of color of the things that we do. The devil's always in the detail, because depending on the industry, the things we do can be quite, it's quite deep and quite difficult to explain on a call like this.
In a similar vein, you mentioned it a little bit about your technology being proprietary, and you spent a lot of time talking about vertical integration of the businesses that you built and how there's assets to having the technology and the manufacturing and the intellectual property all kind of developed internally. Have you found that at all to be a hurdle to integrations with like OEMs or other partners when you're operating on your own systems? Obviously, it's a benefit when you're trying to deal with hijackers and their jammers. But when you talk about partnering with third parties, has that at all been a headwind?
No, it's not at all. So we've integrated with most OEMs in Europe, Japan, Korea as well. We're now starting to integrate with the OEMs in China. And the reality is that from our side, it's very, very easy. It's not complicated. And we probably can do it in a day. It's typically on their side that it could take them 2 or 3 weeks. But fundamentally, it's never taken us more than a month to integrate with any of the OEMs. It's relatively simple. We've got all the APIs. It's really not complicated. If the other side has got all the approvals and they've got the right people, we can do it in a day if they've got the head count to be able to execute on it.
I'd like to hear about new technologies and the impact they're having in your category and how you're approaching them. Autonomous driving and AI. Take them in any order you'd like to. What do those mean to you and to KAROOoo?
So AI, it's a word that everybody's using now, as you well know. It's a word that can mean a lot of things to a lot of people, to different people. But in our space, AI is really about machine learning. It's the ability to get all that data and all those data points and stitch it together and do predictive analysis on that. So we've got AI on, for instance, we do a lot of AI for the banks where we can sort of predict potential customers that won't be paying their bill. And we have that sort of technology, and we're onboarding more and more banks as they see how reliable our data is. We've got it on the video telemetry. We've also got it on the latest tag unit. There's quite a lot of algorithms there, a lot of data collecting points, which we can, at that point in time, also prevent a fraud that's about to happen or other bad behavior that's about to happen. And that's just because of our experience and the amount of data that we have and the speed that we can process that data allows us to do all these type. I don't like to use the word AI because it's very generic, and I'm not sure if it's to write a letter or we more in the algorithms to see. We're less in the arts. We're more in the mathematical space, in the scientific space, and that is really just about being able to have all these data points, bringing it together, making its entails out of it, and being able to predict potential. Mitigate risk fundamentally. That's what it's all about. Mitigate risk and prevent costs for companies and optimize things as well.
And does that optimization look different depending on what geography you're selling into? Because I would have to imagine that your fleet offerings in an area like South Africa are probably very different than Singapore, which may be different than Europe. Or is it actually pretty similar? It's just one dashboard, everything's getting integrated into, and the data that you're getting in one country can be relevant to another.
It's actually copy paste. The only thing that would probably change is whether you're a cement mixing company, or you're a police force, or you're an ambulance service, or you're doing cold storage. That can change things, but it's not because of the geography. It's more the business you're in. And then there is a bit of legislation where you've got to localize your platform. And so it's a combination more. I would say the biggest driver would actually be the industry you're in, not geography. And then the geography would drive, sorry, I'm repeating myself here. The geography would drive the localization. And for instance, the geography like South Africa or Latin America, that would also drive a bit of a need for the stolen vehicle and recovery, because that's something that I believe is also very prevalent in Latin America and South America and in South Africa. But it's in the other geographies we operate in, we don't have those issues.
You may have heard that in the last call, Tesla began to really emphasize autonomy for their entire business. We expect that some of the difficulties we're going through and all of the things that Elon Musk is involved in, the bet that they're making is autonomous vehicles and autonomous robots in our daily lives. What does autonomous driving mean for KAROOoo?
It's a very good question, and I'm not certain that I have the wisdom to answer you. Because, you know, in the time that I've been in the industry, I've been in the industry since 1994. There's been so many things that have come and gone, and they didn't happen, or they didn't happen the way we thought they were going to happen. But fundamentally, uh, if I were to answer that question, I would say there's a few aspects. The first thing is, when will autonomous vehicles be? When will it all be autonomous vehicles in places like Southeast Asia, South Africa, Europe? How long will that take? That's the one part of the question. The second part of the question, the second part to the question would be that, autonomous vehicle only replaces the driver. It doesn't replace the chores, the jobs, the things that need to happen. So does it mean that if you now don't have a driver, you no longer need a management system, if that makes sense? And I think if you remove the driver, you've got less risk of bad behavior by a driver, but the whole management system is still relevant. And especially as we get closer and closer to our customers and we're more integrated with our customers into their daily operations, then I believe it really just is a replacement of the driver. But I don't want to oversimplify it, because it's very difficult for me to know what the landscape's going to look like in 20 years' time. But what I can say is we are agile in our thinking. There's a lot that's going to happen in the next 20 years, and we will work our way through all the different things that could happen.
We have a similar feeling at the Motley Fool. We started in 1993. We wouldn't have expected that we would be able to cover so many companies with new technical tools that would allow us to process the 10K filing of every public company in less than a minute. So you just have to remain flexible.
Yeah, you got to just be agile. You got to be aware, and you've got to be fully aware that technology will change. We're in a very different space today to what we were 10 years ago, to what we were 20 years ago, and certainly to 30 years ago when I started in the industry. So it's fine. As long as there's things to be moved, whether it's humans, whether it's goods, so as long as there's companies, as long as there's operations, there's something we can help them resolve some challenge. And for as long as there's life, there will be challenges. And that's a simplified way of me looking at business.
Thank you. Simple is often best. I think Steve Jobs said, it takes a lot of time to get down to very simple, clear thinking and product expressions in the world. What do you think is the reason that you outperformed the handful of peers and competitors that you faced and that started before you in South Africa?
I think there's a few things. I think that the fact that we're vertically integrated and we've got total control of our customer service, our product development, our call centers, our technicians, they outsource most of these things. So if you look at the amount of staff they have and the amount of staff we've got substantially more, because we don't outsource any of these jobs. And that just makes us a faster, sleeker business. We don't have to speak to somebody who's got to make up their mind and reach agreement. We decide now, and we do it now. If it's a big difference, we don't have to bring in any third parties to make decisions for us, and they've got a competing P&L with us. So that for us, I think, is key. Then it's the actual culture of the company. I think the fact that it's an owner-run business as opposed to professional CEOs. You typically find the professional CEO typically would say, what's good for me and how am I going to get my incentives at the end of the year? Typically, that's how they would think. And I think very long term, I think 20 years, if that makes sense. I can't think what's good for me this year, because what's good for me this year might be very bad for me in the next 5 years. So I think fundamentally it's culture and the fact that we're vertically integrated and we're agile.
And to just really hammer that point home, KAROOoo is kind of a family operation, if I understand correctly. Yes, you own the majority of the shares and have a lot of voting control, but your children as well are invested in the business. So I have to imagine you're building a company that you want to be around for their lifetimes as well as your own.
Well, the idea would be that it's what I always tell them. I haven't built the business. All I've done is built a great platform that's listed on a great financial market, so that will allow them to build a big business. So that's the way I feel about things. It's taken me a long time just to build a platform so that they can build a business on top of it.
Can you talk about the development process of creating this company and maintaining such a large stake in the business? This is viewed positively by the Motley Fool because, in general, when we recommend a stock, there are two things that are pretty consistently true, not across every recommendation, but we typically hold for at least 5 years. So we're a site and set of solutions that's trying to teach members the importance of understanding the business and building your portfolio and aligning yourself with almost getting on the airplane of that the CEO in that business is flying for you, rather than thinking you're the pilot and trading it all day and trying to, think that you have advantages in the short term. So to really think very long term in our orientation. And so with that basic thinking, we look across the marketplace, and it's very helpful to see a business where the CEO owns a large stake of the company. Now, it's very hard to do because through the financing process and going into the IPO, you often see the ownership whittled down. Sometimes you see great companies that now are 32% owned by a private equity firm, and that presents its own challenges for functioning at a high level in the business with decision making. So talk about, in a way, the sacrifices that you made in order to maintain such a large ownership stake in the business, and what that ownership stake, what advantages it provides KAROOoo, and if you see any problems with it, like liquidity for the stock, for example, if you think that's an issue out in the marketplace.
I think the reality is this: because I've built this business from the ground up without raising any money. The only time we raised money was when we listed on the NASDAQ, and that wasn't necessarily because we needed the money, although we could have needed it, and we didn't raise that much. It wasn't that much that we raised. I think fundamentally, I always have the mindset that to be to be a quick business, you can't have a big board. Typically, you got to have a like-minded board that can move fast. And also, I never was in the business of throwing money at things to grow. So I put in a lot of hours, a lot of attention to detail, and grew the business slowly, and maybe not that slowly, but slowly, and over many years and consistently. So if you look at our track record and you go back 20 years, you'll see consistency for 20 years. Always growing that top line, also always growing the customer base, always growing that subscription revenue, always looking at profitability. And when we spend a lot of money, then understand where we've overspent, cut back, get the profitability back up. You know what I mean? So there's always a bit of fat, and then you cut back on the fat until, and it's the way we've grown the business. With that, because of me holding so much of a stake and having voting rights currently on about 68%, we only have 32%. Then we've got an additional problem, is that a lot of the shareholders that own that 32%, they're long-term shareholders, which also doesn't help liquidity. So you sort of have quite a few shareholders, yet even when other shareholders contact us and say, we want a large block, we sort of contact existing shareholders that have been with us for a long time, and they're not sellers. So we've got a very strong following from our existing shareholders that don't trade the stock, which gives us a low liquidity, which in itself is also a bit of an issue. So hopefully we did a secondary about 2 months ago. I don't think the market understood that secondary because I gave a 16% discount in the process of selling the shares. A lot of our shareholders were very upset why I gave a 16% discount. And but I think over time that liquidity should increase, and hopefully the price also increases.
I have to tell two stories around equity ownership that are relevant, at least to me. Hopefully they're relevant to all of us and all of our viewers. But one of them is just talking and spending some time with Jim Sinegal, the founder, former CEO of Costco, which has been such a remarkable business and success story. And he said, as you just said earlier, Zach, he said, every important decision I make, I look 25 years forward in my mind and try and understand the implications of that. What ends up happening with that mindset is that you often do trade off a bad year or a few bad years for a great 5 to 10 year period. But obviously that can be confusing. You're never wanting to just take a bad year, but there are certain things where we're going to make sacrifices and put expenditures in now because we have a good sense of where the world's going. We're going to make that reinvestment now. The second one is an angel investor that I had an opportunity to meet in Silicon Valley, a wonderfully successful, very low key investor that most people have never heard of, who's had just a remarkable story of success in investing in technology. And he asked at the dinner table, I asked him, what is your top factor? What are your top factors that you look for? And he said, well, I have 5 factors, but the number one factor is more important than the other 4 combined. When I look for a really startup business, and everyone asked, well, what is the factor? And he said, go for it and guess. So each member made a guess and nobody got it right. And he said, the number one factor I look for is that the founder does not want to easily give up equity. Once I hear round numbers, like we'll sell you 15 to 20% to get started, he said, I'm not interested, but thank you very much, because I am going to be a shareholder. So I'd rather, if somebody says I'll sell you 1.294% for, that level of detail and ownership means they're going to respect my ownership over the long term and not just dilute me into the ground. So I see a lot of similar dynamics for you in developing Karooooo.
Thank you.
Can you tell us about the Karooooo region in South Africa?
Well, it's a semi-arid region, a bit like Arizona, but I thought the Karooooo was the most beautiful place on earth until I went to Arizona.
So it might have been Arizona with 5 A's on the end.com. Had you traveled to Arizona before?
No, I started off Karooooo because I really liked it. But the reality with the O's is that when I tried to get Karooooo.com, there's someone in America that owns a warehouse and it's Karooooo.com. So, and he wanted $10 million for the name. And I said, okay, that's fine. I'll keep the money, you keep the name, and I'll just do it from 3 O's till 9 O's. We own all those Karooooo.com. So it was
But you
cheaper.
don't own 10 O's. You don't own 10
I think
O's.
we might, actually. We might.
It's a fun investment principle from Peter Lynch. And he said, as you cast your eyes across the public markets looking for great companies to invest in, if you happen to find a very well-run business with great growth dynamics, underlying economics are strong, and it has a name that people can't understand or sounds silly or absurd, that can be a wonderful investment, because in general, institutional investors may not want to have to explain to clients why they own this absurd thing that they'd have to try and explain. And so you get a discount on the name as a shareholder. And so I feel like we may be getting that discount in marginal ways as people wonder what is going on with that company name. Thank you very much for that, Emily.
We spent a lot of time talking about how we're long-term investors. You obviously manage your capital all the way from those initial $10 million for the name to how you put together your hundreds of millions of dollars in cash flow to use. All of that coming big picture, we intend for anybody who is listening to us right now who is hopefully a Karooooo shareholder or is interested in becoming a Karooooo shareholder to buy and hold these types of businesses for the long term. Now, we talked about how 10 and 20 years out, being flexible is probably more important than having a very clear strategy today. But let's talk 5 years out, a holding period, say, for somebody who's listening. What do you view as like your biggest opportunity over the course of the next 5 years? And what is, say, the biggest risk or headwind that's preventing you from achieving that opportunity?
I think, Emily, the reality is this. There's risks that we don't know about and that we only face with them when they knock on our door. That's the one point. But I think our biggest risk is if we stop having the grit and the culture to continuously build. If we look at our business, our ARPUs in emerging markets are substantially lower than the ARPUs in Canada and North America. So you're going to have a much bigger business. Your business is probably going to be 4 times the size in emerging markets to be the same in terms to have the same revenue as a business in North America. So we need the grit, we need that agility, we need the culture. And if you lose that, we've got a problem. That's probably our biggest risk. When you talk about 5 years, internally we've got what I would call a target that I believe we'll reach, which is to double our business in 4 years, which is actually a compound growth rate of 19%. And if you look at our current ARR right now, we're at about, if I'm not mistaken, just over 18%. So we just got to carry on building and hopefully double our business in the next 4 years. With that comes a lot of development work, R&D, increasing footprint, improving our operations. So it seems simple, but there's actually a lot of work that goes into it.
Excellent. As we come down to our closing few minutes, we don't want to take any more of your time. But this has been so informative. Thank you. And so enjoyable. It's funny because one of my favorite things about investing is sometimes when I'm following a business closely, I feel like I know the CEO already. And so it's actually so enjoyable to get a chance to talk to you. I've enjoyed watching a number of your interviews that have been available in the quarterly calls and following the business, and so happy to be a long-term owner of Karooooo shares. And I don't mind limited liquidity. That's fine. We just keep buying our shares over time and enjoy. I'm sure that the other investors that would like to buy large blocks of stocks would like to see that change. But I have some rapid fire questions for you now to close.
Sure.
Just almost some wild card questions, and feel free to dodge any of them that you'd like to. Are there any companies that you admire, that you particularly admire?
I think there's a lot of leaders that I admire, leaders that are committed. You typically find the leaders that I admire have been at the same game for many, many years. So I like the Bezos story, the Microsoft story. Those are big name stories, but there are small name stories as well. But it's typically people that have dedicated their life to doing one thing and just continuously building what they've started and improving what they started. So those are typically the people I admire, the people that are consistent and do one thing their whole lifetimes, if that makes sense.
Yes, there's a wonderful short book I recommend to anyone called Mastery by George Leonard. And he just explains what happens when somebody spends their entire life working on in a single zone and the many benefits that come from that. If somebody on your shareholder call said, Zach, I think we should move 20% of the cash on your balance sheet into Bitcoin, what would you say?
Look, this is, it's either I should dodge this or I should be honest. So I'll choose to be honest. I don't understand cryptocurrencies, and I always say when America decides that the US dollar is going cryptocurrency, I'm in. If tomorrow Germany decides that they're going to become their currency is going cryptocurrency, I'm in. But for as long as there's cryptocurrencies, I mean, tomorrow we could have the Elvis Presley crypto. You can start. So the philosophy of crypto, you can't more, you can just divide it, but nobody talks about that you can just start another crypto tomorrow. So for me, it's a little bit of a great game to be played of greed, and a lot of people will make a lot of money, and at some time either the whole thing explodes or it converts to becoming a government currency. I'm not certain, but I'm quite risk adverse, and I don't typically invest in things that I don't understand. So if I don't understand it, I'd rather go to the casino. At least understand that I'm going to lose. So, but
I
I'm
know
not
going
thinking,
in.
I mean,
know that I will
I'm
lose.
So you're obviously a crypto man.
Oh, no, actually, I would say that 97.9%, making the number up, of all crypto is essentially fraud. It's just a Ponzi scheme. I've talked about meeting some people who have created digital assets and asking them, if you had to hold this digital asset you've created for the next 5 years, would you be willing to do it? And they said, no, I'm selling this. What are you kidding? So
yeah, it makes no sense to me.
Yeah, I do believe in Bitcoin, but I won't go into many details of that in our remaining 3 minutes. But perhaps if we get a chance to sit down and have coffee at some point, I can maybe share some of the thoughts as to why I believe that. What is one thing you really love about the company culture at KAROOoo, and one thing you'd like to enhance it going forward?
I think the most important is that we all sit in an open space. We don't, I detest people that say, I've sent him an email. I don't know what that means. You sent an email. Have you phoned him? Have you followed up? Have you made that happen? That's the bottom line. It's, the fact that you've started the process by sending an email, that means nothing to me. It's actually, have you made it happen? That actually, it's the bottom line. Second thing is, I've got a meeting with him next week. But why don't you just phone him and have the meeting? So this shouldn't take you more than 2 minutes. So it's that culture of getting things done, and that open and transparent culture where we sort of can sit in an open environment and discuss things openly. And if there is something super confidential, which shouldn't be much, hopefully, then you can go into one of the rooms that we do have for confidential discussions. But fundamentally, it's that open culture, the speed, the agility, and the just being pragmatic, and at the same time following all the company rules and making sure you got good corporate governance. And often people confuse corporate governance with clumsy management.
What about something that you'd like to add to the culture or enhancement you'd like to make?
Frankly, it's just I wanted to improve. I want better systems. I want our people to improve. It doesn't matter what aspect of the business. I will find you something to improve. We don't run a perfect business. There's a lot that we need to improve.
Our mission at the Motley Fool is to make the world smarter, happier, and richer. Always comparative words, because we can always get better. We'll never cross the finish line. We share that spirit with you. My final question is, what are the chances that you will be CEO of KAROOoo in 10 years?
I think the reality is, if I'm healthy, I'll just be executive chairman and I'll have a huge influence over the running of the business. But I think fundamentally, I would step down, because I think the biggest energy drainer for me as a CEO is having to talk to investors. It's not my DNA. I'm an operations guy. I like making things happen. And if I'm just the executive chairman, that means the CEO can do that.
I mean, can't we outsource that even as CEO? Is it possible that we can hand that to the CFO or investor relations or something that could stand? And I would have to believe
people always ask to speak to me, if that makes sense. Maybe I'm handling it incorrectly. That's what you're saying. Maybe I should actually just say, I'm not talking to investors anymore. You just speak to the investor relations. Maybe that's what I should be saying. I'm not sure. I'm learning something on this call.
I think you should seriously consider that. I think you should
Yes.
seriously consider that. I mean, I obviously we delighted in getting an hour of your time while you're on vacation. So sorry to take advantage of that opportunity, but I would say that I would love it if you were CEO 10 years from now and found a way to have your team answer to so many investors. I mean, we know some public companies that really don't even interact with analysts at all. They limit it deeply. I'm not saying whether that's a right or wrong thing, but it's been a few very successful businesses that have done that. But overall, the most important thing, I believe, is that the company will flourish if you and your leadership team are getting to do the work you love to do throughout. And we don't all get to choose. So many challenges come at us that we're not expecting. But having talked to so many executives and followed so many different public companies, I would at least vote in favor with our few shares of the Motley Fool that we would be happy if you were outsourcing some of the investor conversations so you could spend more time on product innovation, your people, and the things you love to do.
Thank you very much. Cheers.
Thank you so much for this hour. And thank you, Emily, as well. Thank you, Zach. And best of luck to everyone at KAROOoo.
Thank you. Thank you, everyone.